The Ministry of Mines and Mineral Resources in Sierra Leone is aiming to launch its 6th offshore licensing round by October 2025. If all goes according to plan, Sierra Leone could see its first commercial crude oil production as early as late 2027 or early 2028. That would be a remarkable turnaround for a country that just a few years ago was barely on the oil map. It could transform one of the world's poorest countries practically overnight. Sierra Leone, that one of the poorest countries on earth, might actually be sitting on an oil reserve even bigger than Ghana's entire stash. For decades, Sierra Leone was largely overlooked in the race for West Africa's oil riches. While neighbours like Ghana and Nigeria surged ahead with major discoveries and booming production, Sierra Leone's story was more about hope than reality. Exploratory drilling in the early 2000s sparked excitement. Wells named Venus B1, Mercury 1, Jupiter 1 and Savannah 1X hinted at potential beneath the waves. Big international players like Anadarko and Lukoil invested millions chasing deep-water prospects offshore. Yet despite these early signs of promise, Sierra Leone's oil ambitions never truly took off. A cruel sequence of events stalled progress. The devastating Ebola outbreak in 2014 halted operations and scared off investors, followed by a historic plunge in global oil prices in 2015. Fast forward to 2025 and the narrative is shifting. New seismic data, renewed interest from industry heavyweights and a government determined to rewrite its energy story are converging to breathe life back into Sierra Leone's long-dormant oil frontier. But how did it all come to this point? And what stands between Sierra Leone and the possibility of becoming West Africa's next oil powerhouse? Let's dive in. Between 2009 and 2013, Sierra Leone was buzzing with anticipation. Explorers drilled well after well offshore, hoping to strike black gold beneath the Atlantic waters. Anadarko Petroleum, in collaboration with Tullow Oil and other industry names, pushed forward in their quest, focusing on deep-water prospects with names that seem almost mythological. Venus, Mercury, Jupiter, and notably the Vega prospect, which was believed to contain up to 3 billion barrels of recoverable oil. The excitement was palpable. Early data and seismic surveys suggested that Sierra Leone's offshore basin could hold enormous potential. If these discoveries proved commercially viable, it could transform one of the world's poorest countries practically overnight. In May 2025, the government launched its first major 3D offshore seismic survey in over 10 years. This ambitious project, led by geo-partners and with data processed by global energy data powerhouse TGS, covered an expansive section of Sierra Leone's offshore basin. The results of this survey are expected to be a game-changer. Why? Because seismic surveys are the oil industry's crystal ball. They help companies see what lies beneath the ocean floor, identifying the most promising spots to drill. Fresh, high-quality data reduces risk and can attract investment. The preliminary results, expected by October 2025, will play a key role in Sierra Leone's upcoming 6th licensing round, where the government plans to offer up to 60 offshore blocks to investors hungry for new opportunities. What's truly remarkable is who is watching. Over the past 18 months, heavyweight oil companies such as Shell, Petrobras, Hess and Murphy Oil have acquired Sierra Leone's geological data licenses. These are not small-time players. Their interest signals a serious vote of confidence in the country's potential. And the government's estimates are jaw-dropping. As much as 30 billion barrels of oil equivalent may lie offshore, including the legendary Vega prospect and numerous other leads yet to be fully evaluated. Can Sierra Leone leapfrog Ghana by 2027? This is where the story gets bold and exciting. The Ministry of Mines and Mineral Resources in Sierra Leone is aiming to launch its 6th offshore licensing round by October 2025. With the goal of awarding exploration blocks quickly, streamlining approvals, and getting rigs back in the water for drilling by 2026. If all goes according to plan, Sierra Leone could see its first commercial crude oil production as early as late 2027 or early 2028. That would be a remarkable turnaround for a country that just a few years ago was barely on the oil map. To put this in perspective, let's look at Ghana. Ghana's oil industry took off with the Jubilee field in 2010, followed by the TEN and Sankofa fields. Today, Ghana produces around 300,000 to 350,000 barrels per day, a substantial output for the region. However, Ghana's growth is slowing. Many of its major fields are maturing, and no new giant discoveries have come online since 2016. Production has plateaued, raising questions about how long Ghana can maintain its current output levels. Could Sierra Leone overtake Ghana? It's within the realm of possibility, but it will take more than just having the oil underground. There are critical factors at play: regulatory speed, financial backing, infrastructure development, and political will. Sierra Leone currently imports about 15,000 barrels of refined petroleum products daily. Building a national refinery is a top priority for the government, as it would not only reduce import dependence, but could position the country as a regional hub for refined oil products. Investor-friendly fiscal terms also strengthen Sierra Leone's appeal. The government offers a competitive 25% corporate tax rate, along with 10% oil royalties and 5% gas royalties. Additionally, Sierra Leone seeks a carried interest of 25 to 30% in all licenses, ensuring it benefits from production without carrying all the upfront costs. The race isn't only about who drills first or pumps the most crude. The bigger picture involves refining capacity, infrastructure, and regional energy influence. Sierra Leone's ambition to build its first major oil refinery is a strategic move that could change the dynamics of West African energy markets. If successful, this refinery could reduce Sierra Leone's dependency on imports, provide affordable energy domestically, and even enable the country to export refined products to its neighbors. This downstream capacity is a crucial piece of the puzzle and could give Sierra Leone a competitive edge over Ghana. Ghana's energy strength is tied not only to its oil output but also its ability to export natural gas and refined petroleum products across the region. Sierra Leone entering this market would create competition that could shift regional power balances in unexpected ways. Sierra Leone stands among the poorest nations globally, with a GDP per capita hovering below $600. Oil wealth has the potential to radically change this picture by bringing in billions in revenue, creating thousands of jobs and funding critical infrastructure projects like roads, schools and hospitals. But Sierra Leone faces internal hurdles. Governance, transparency and institutional capacity are crucial for managing oil wealth effectively. The history of resource-rich countries includes many cautionary tales where corruption or mismanagement squandered oil windfalls, leaving the population worse off. Sierra Leone's government has made encouraging moves by setting clear fiscal terms and insisting on carried interests to ensure national benefit. Yet execution remains the biggest test. Does Sierra Leone have the political stability and leadership to navigate this complex industry and transform oil potential into real, sustainable economic growth? The stakes couldn't be higher. Get it right, and Sierra Leone's future could be transformed forever. One of the biggest factors determining success will be how quickly Sierra Leone can attract committed partners and fast-track exploration and production activities. Unlike Ghana, where large supermajors like Tullow Oil and Cosmos Energy were early movers, Sierra Leone has yet to secure a major oil company's formal production commitment. However, the presence of big names like Shell, Petrobras, Hess and Murphy Oil licensing geological data signals growing interest. This is encouraging but still tentative. What could tip the scales is allowing nimble, fast-moving independent companies to grab blocks and move quickly. These independents often take risks that majors avoid and can drill first, proving viability before bigger players jump in. If Sierra Leone's licensing round incentivizes speed and agility, it might just leapfrog Ghana's slower, more mature oil landscape. Time is not on Sierra Leone's side, though. Global oil markets are volatile, and delays in regulatory approvals, infrastructure development or financing could stall progress indefinitely. Every month counts, and the government must keep bureaucracy lean and processes transparent. Here's where the story takes an intriguing turn that many outside observers might overlook. While oil reserves and production volumes make headlines, the downstream side of the oil business, refining and distribution, could ultimately decide who dominates the region's energy future. Sierra Leone's plans to build a major oil refinery could be a game-changer. Currently, the country imports approximately 15,000 barrels of refined petroleum products daily, meaning they pay foreign suppliers for fuel and gas. This dependency drains money from the local economy and exposes the country to global supply shocks. If Sierra Leone succeeds in establishing a refinery, it would not only meet domestic demand, but potentially export refined products like gasoline, diesel and jet fuel to neighbouring West African countries. This would generate substantial revenue and elevate Sierra Leone's status from mere oil producer to regional energy hub. Sierra Leone entering the refining market means Ghana might face stiff competition for regional customers and market share. This shift could disrupt regional energy geopolitics, sparking new rivalries or cooperation depending on how the countries manage their growing energy sectors. Sierra Leone aims to launch its 6th offshore licensing round by October 2025, award exploration blocks quickly and begin drilling by 2026. The government targets first oil production by late 2027 or early 2028, positioning the country as a key oil producer in West Africa. Beyond oil extraction, developing infrastructure like pipelines, export terminals and refineries is essential to maximize benefits. Local content policies will promote employment and business opportunities for Sierra Leoneans. A $30 billion offshore oil frontier could inject much-needed revenue and transform Sierra Leone's economy. The Vega prospect alone, with its estimated 3 billion barrels, holds enormous promise. But potential means nothing without execution. If Sierra Leone manages to attract serious investment, accelerate licensing and approvals, and build critical refining and export infrastructure, it could surpass Ghana's oil production by 2027 and become a dominant regional energy player. However, if bureaucracy slows the process, if financing falters, or if the government struggles with governance challenges, this opportunity could once again slip away. Even more surprisingly, Ghana's more mature industry, backed by established contracts and infrastructure, might continue to outpace Sierra Leone despite the latter's vast untapped resources. So the real race isn't simply about who has the biggest oil reserves, it's about speed, strategy, leadership and vision. Here is the ultimate twist in this story. The headline figure of 30 billion barrels offshore, including the 3 billion barrel Vega prospect, means little if Sierra Leone cannot move quickly and decisively. Oil discoveries alone won't guarantee success. The crucial factor is how rapidly Sierra Leone can transform exploration into production, and production into profitable exports, particularly refined products. This is where many resource-rich countries falter, not for lack of oil, but because they fail to build the institutions, infrastructure and governance needed to capitalize on their wealth. For Sierra Leone, the next 2 to 3 years are make or break.